Hello, this is Brian Bogner with Parallel Financial. We're going to take the next few minutes and talk about why we are more bullish on the stock market than we've been in a while. Let's go ahead and get started. The first reason is the valuation level of the S&P 500. On an absolute level, this chart that we're looking at right now, actually stocks are a bit expensive historically. You can see here, just shy of 25 PE ratio. And if you look back, and this is going all the way back to the 30s, we're on the pretty high end of being expensive. However, when you compare that to where we are today in interest rates, okay, actually the stock market is historically cheap. We can't always evaluate stocks in a vacuum. We sometimes have to take a step back, see the type of environment that we're in to do a proper valuation. So the stock market is not as expensive. We've seen the headlines saying, PE ratios here, things like that. Well, when you compare it to interest rates being so low, cost of capital being so low, the market is actually pretty fairly valued, even inexpensive right now. So a positive for stocks. Second reason, well, actually along the valuation, another thing that we look at is the rolling 10-year returns of the S&P 500. When your 10-year returns get up in the teens and up here in the 20s, this typically have been major market tops, and the market goes into typically a long slide after that. We're nowhere near that level. Now, does that say the market wouldn't potentially go down from here? It can. But from a valuation standpoint, we are not expensive relatively. Okay. Second reason, we're starting to see cyclical groups lift off, meaning they're starting to perform well. Okay, these are the sectors in the S&P 500 year-to-date returns, and to the left here we have our more cyclical names: financials, cyclicals, technology, industrials. These tend to do well when the economy is doing well, and then our more defensive names over here to the right: utilities, staples, energy, healthcare. They just tend to kind of trudge along. Year-to-date, our more defensive groups have been outperforming. However, if we look at the last 3 months, we see almost a reverse of that, where we're really starting to see money now flow into the more cyclical names. Another positive for stocks. Third reason is that the actual trend in the stock market is starting to turn positive. This is a chart of the S&P 500 equal weight index. Okay, this means that we take all 500 companies in the S&P 500 and we equal weight them. They all have the same weight. So, your big mega companies like Apple and GE and Facebook and Amazon don't have such a large weight in the index. They all have an equal weight. Well, that group, all 500 stocks now are starting to move up and reach all-time highs. If you notice, last year in 2015, this group underperformed the market cap weighted index because it really was only the top 10 to 15 stocks that were really doing well. The other 490, the average stock was actually negative last year. And so sure enough, it underperformed the market cap weighted index, but now that it's moving higher and outperforming, more and more stocks are participating. Again, another bullish reason. Last reason here is that the public is not buying it. They're not buying this market right now. Okay, we get it all the time. We hear it constantly. Negative interest rates. We don't know about the election. There's so much uncertainty out there. Should we be even in stocks right now? When that chorus becomes very elevated, many times the public can be wrong, and so it's a bit of a contrarian indicator where you take a step back and you say, maybe this is a positive, because the saying goes, bull markets climb the walls of worry, and there's a lot of worry and concern right now. And sure enough, these net flows into mutual funds and ETFs show that, because with stocks here, and we've got domestic, international. Look, you've got a market that's making all-time highs, and we've experienced net outflows in mutual funds and ETFs. Last year, net outflows. Matter of fact, since the low of 2009, domestic stocks in general have experienced outflows. Now, international has picked up a lot of money, so there's a lot of money flowing there, and international is starting to finally improve and do well, so that's been good. But where's all the money gone? It's gone into fixed income. It's gone into bonds where interest rates are at some of our lowest levels. So, in review, while absolute valuations of stocks are elevated, the relative still remains attractive. Cyclical groups are beginning to lift off. The price trends are positive. More and more stocks are participating, and the public's not buying this market. They're waiting to see what the election will bring. And in our opinion, these 4 things have us more bullish in stocks than we've been in a while. If you're not a client of Parallel Financial and you would like a free portfolio review, you'd like us to sit down and just look at your portfolio, make sure you're invested the right way, make sure your risk profile matches your investments, please give us a call. Shoot us an email. We'd love to do that for you. If you have any questions about anything we talked about today, again, would love to talk to you as well. Here's our contact information. Thank you so much. Have a great day.